Hello and welcome to the Financial Report. The UK government is planning to temporarily exempt companies newly listed on the London Stock Exchange from stamp duty, the Financial Times reported. Nasir Karim with more.
The move is expected to be part of November's budget and will exempt investors from the 0.5% stamp duty that comes with share trading for new IPOs. The FT said the potential tax exemption will last for 2 to 3 years after a company's debut on the market. London was once considered one of the 3 major international finance centres, but has been losing its lustre. The UK government is keen to boost the London Stock Exchange's global competitiveness and attract more retail investors. The exchange has raised about $210 million in the first 3 quarters of 2025, which is lower even than emerging markets such as Angola and Zagreb, the report said. It represents a decrease of 69%, the lowest level in 35 years. The exchange has also fallen out of the top 20 globally in IPO funds raised, ranking 23rd. They face competition not only from Europe but also Asia and the Middle East. Significantly, the valuation of companies listed in London are unattractive, weakening their ability to raise capital. Pharmaceutical giant AstraZeneca plans to list on the New York Stock Exchange to attract more investors, but says it will retain its London listing and UK headquarters. The company's CEO, Pascal Soriot, has long been critical of the UK's regulatory system, expressing concern that the country is lagging behind the US and China in competitiveness. Energy companies have also announced plans to relocate their primary listing to the US to tap into more liquid markets while retaining a secondary listing in London. Nasir Karim, TVB News.
Hong Kong stocks climbed to their highest level in more than 4 years on their first trading day in October. Tech shares jumped, fueled by upbeat sentiment over artificial intelligence and JP Morgan's price target hike for Alibaba. At the close of trade, the Hang Seng Index was up 1.61% at 27,287.12 cents, its strongest close since July 2021. Index heavyweight Alibaba gained 3.5% after JP Morgan raised the tech giant's target share price to 240 Hong Kong dollars from previous 165 Hong Kong dollars. Japan's Nikkei 225 added 0.9%, with tech stocks also leading gains. South Korea's Kospi closed 2.7% higher after Samsung Electronics and SK Hynix announced their agreement with OpenAI to supply its Stargate data hubs with memory chips. Chinese markets are closed for the Golden Week holidays. The Hang Seng Tech Gauge up 3.36% to 6,682 points. Again, it's a feud day for the 10 most actives. All 5 stocks topping the charts climbed to their 3-year high. Alibaba scaled to a height of $183.10 after a $6 jump. Tracker Fund rose over 1.5%. Tencent and CSOP Hang Seng Tech up 2% and 3.3% respectively. Kuaishou notched an even more impressive gain of 8.5%. Meituan climbed to its 5-day high at $105.80. Chipmaker SMIC also closed the day with its record high of $89.65. 5-day high for BYD at $113.90. And Baidu rallied $6 or 4.5%. European markets, UK FTSE up slightly by 0.04%. The French CAC up 1.37%. Same for German DAX. And that's the Financial Report. Thank you for watching.